Good afternoon and good morning, everybody. We're just waiting a few more minutes. We're still 2 minutes to 3 p.m. before the rest of the participants have been joining us. I will get back to you very shortly, but looking forward to having a discussion with you today. Again, a very good afternoon and morning to everybody who has been joining in the past 3 minutes. We're just waiting a few more minutes, let's say 3 to 4 minutes before I start with this webinar for today. So just lean back, get yourself a coffee and enjoy the waiting time. For those who have not seen my message in the chat function just now, we'll be commencing in 2 minutes at 3:05 p.m. Looking forward to it. In the meantime, if you have any questions later on, please feel free to use the Q&A section. If I do not see them during the presentation, I will be looking to answer them after the event. I'm going to drop you all in an email to whomever has shared a Q&A there. please do not use the chat function when you want to send something, else I will not see it. So please use the Q&A function of Zoom. Okay, let's get this started for today. I'm very happy to share with you the Asia Pacific 2022 mid-year report webinar for today. I am joined by one of my colleagues, Hannah, who will be also looking in the background and see if I'm missing anything. Feel free to use the Q&A function throughout the webinar in case you have any particular questions. Otherwise, I'll just rattle on. It's good to see many familiar faces of people that I know, but also always good to see other people that I've never met in my life before in this webinar for today. I'm so looking very much forward to engaging with you today. Always feel free to drop a message and I see how I can fit your questions into my structure of my talk today. For those who do not know Galen Growth yet, we are the global leader for digital health venture analytics. We are working with most of the big pharma, insurance, medical device firms, CVCs, VCs globally, and are engaging with them, helping them to structure their own return on investment pipeline in the digital health market and connecting them to digital health startups globally. We are deep diving into their problem statements and are trying to solve their issues together with them by also partnering externally. So if you are a startup, always feel free to submit your profile via our Health Tech Alpha platform. The more information we have about you, the better it is for us to later match you to our clients that we are working with. This is the Asia Pacific report for today, so I'm going to walk you through that. In the coming days, you also have our webinar about North America. If I'm not mistaken, it will happen on Thursday, which is going to get facilitated by my colleague Sarah, who's located in our Europe office. There are also 3 other reports available: the Europe, the Middle East, and the South America report. You can scan the QR code in the lower right corner in case you have not yet done so, or you can also head over to either healthtechalpha.com/research or to galengrowth.com/research, which will later on bring you to the same page ultimately. For those who do not know me, I'm one of the founding members from Galen Growth, and I'm also in the role of the Chief Research Officer. I'm also the Chief Architect of the Health Tech Alpha platform. I'm basically the person who oversees most of our client engagements that we do, as well as all of our data analytics, research, etc. that my team and I are publishing on an annual basis. Feel always free to drop me also a message in case you have any particular question. You can reach me on an email via LinkedIn. Both is fine, and I'm always happy to engage with you in either way. To all of our research reports, we're using our data that we are aggregating within our Health Tech Alpha platform, which is currently the leading platform for digital health intelligence and analytics. We're tracking more than 12,000 digital health ventures on a global scale. We're collating more than 180 million data points that we are analyzing, and hence we can extract very beautiful information out of that will ultimately give you more information about how does digital health develop on a global scale. How we are basically going about this, and this is what you can also do within the platform, is you can use the platform like a Google search bar. You can search through our ventures that we have overlaid with advanced analytics. You can use this for your own benchmarking purposes. After you've searched for something, you can create your own list and can later on deep dive into the venture profiles. We are collecting information not only about funding, but also about with whom are these ventures partnering with. Do they have any clinical trials? Do they have any products within the market? Do they have any regulatory approvals? In which therapeutic focus areas are they active in? Do they have any scientific publications and any of the peer-reviewed journals? And then you will also get a daily update about what is happening with these ventures and they are getting announced in any news that are out there. Ultimately, what this can help you as a user is you save valuable time by searching or by Googling your way through the digital health ecosystem by using our data analytics. And in case you are looking into a more serious engagement with us, you can also simply reach out to us, and we are seeing how we can bring forward to you more competitive intelligence and how you can integrate certain new solutions into your own pathway as well. We've developed a very strict digital health taxonomy that's developing over the years. In case you have not seen our recent update, that we've launched a couple of new clusters within our own taxonomy. I wanted to use a minute to walk you through that. We've basically launched the solution of the clinical trial side that previously was category under the research bucket, which is now its own cluster. With the categories under it of decentralized clinical trials, clinical trial matching, and data collection tools. We are always developing the taxonomy, considering that there are more and more solutions also getting publicized globally, and the digital health ecosystem is developing. We're still in a very nascent stage. Digital health is probably about 12 to 15 years old now, and therefore there's ultimately always a development of the entire taxonomy that is underlying it, and we are always going with this. So we are revising our taxonomy as we see new solutions appearing within the market as well. So deep dive into the digital health ecosystem. There was lots of talk recently that there was a deceleration of funding globally. We've seen the same, however, there are certain underlying factors, and I'm gonna try to focus on these during this webinar today. Again, if you have any particular questions about it, do always feel free to simply drop it in the chat. So in Asia Pacific, what we've seen is that there was a total funding of $2.37 billion of investment deployed across 166 deals. That was a drop as compared to the previous year. And we've seen that this was primarily driven out of China, considering that we've seen a major drawback out of investment, multiple factors that are underlaying the deceleration within the Chinese ecosystem, particularly on the tech crunch from the government side that kind of scares off investors to deploy either more investment into digital health ventures, as well as writing larger ticket sizes. The larger ticket sizes, where my colleague Sarah is probably also going to talk about on Thursday, has not been limited to China here only, but we are seeing a similar reaction also in the US market, where we've seen significantly less mega deals happening over the year. And I'm going to deep dive into that a bit later on as well. Cardiovascular diseases took the pole position this year in terms of where funding has been deployed in terms of therapeutic focus areas. This was the very first time in this part of the world. Previously, we always had oncology solutions taking the lead position, and I'm also going to deep dive a bit more into that. On the cluster and category side, we've seen that patient solutions and medical diagnostics are taking the lead spots this year, and therefore relegating both the online marketplaces and the research solutions under the third and fourth rank respectively. Later on, there have been quite a number of partnerships announced, 98 in total, and I'm going to show you a bit more how this is comparing to the overall development on a global scale as well. Overall, what's a very positive trend that we start seeing, and this could be also since investors are a bit more scared about deploying larger ticket sizes, is that we've seen that overall early stage funding has been accelerating again in Asia Pacific this year so far again. Looking into the Asia Pacific ecosystem overall, it's a very healthy ecosystem. It's the second largest ecosystem globally out there, with 2.2 thousand ventures as of the end of 2021. It's a proportion of 27% of the overall global ecosystem, just to put you into perspective how strong the ecosystem here actually is. If you are not located within Asia, you often don't really hear much about this area, considering that many of the markets here are very domestic. So often when you have, for instance, a South Korean solution, it is very rare that they're expanding that solution overseas. Similar is for Japanese solutions. Similar is also for Chinese solutions. These three ecosystems are rather large, but often are catering their own national market more than trying to export their solutions also globally as well. So breaking down a bit more what I was saying earlier, we've heard lots of talk, especially in the social media recently, that there was a huge deceleration in terms of how much funding has been deployed. We've seen the same if you compare this on a year-by-year comparison. However, and what I've done for this webinar alone only is looking into half-year on half-year comparison over the years. And yes, it is true that there has been a major dip as compared to H1 2021, whereby $25.1 billion have been invested in the 5 regions that we are currently covering. However, if you compare this to the previous years, so 2020 and 2019, we're seeing that the funding continues to accelerate beautifully. So now what you can start deriving out of that is that maybe 2021 has been such a massive year for digital health in terms of how much funding is getting deployed. Over the pandemic, what we've seen is that many people started talking about digital health. Hence, they've created, let's call it FOMO, around you want to, if you are an investor, you would like to invest money into digital health right now. So this accelerated the entire funding deployment last year. So what we've seen this year, again, considering that there was lots of drawbacks, stock prices falling, we are at the edge of entering a recession globally, investors are becoming more tight with their money. However, if you still compare how the ecosystem has been developing over the past 24, 36 months, we're still seeing that as compared to 2020, we've seen 72.4% more funding getting deployed in the first half year in 2022, which is a major acceleration as compared to what we've seen before. Also, when you look into pre-pandemic, so 2019, we've seen that the funding has been increasing by 53%. This has been because at the beginning of the pandemic, in the first half of 2020, we've seen that there was a bit of a funding crunch, especially in the US and especially in China as well during the time there. So hence we've seen that investors kind of pulled back on deploying capital. Now this year we are so far seeing it's a very healthy pipeline still. We are still on a very healthy growth in terms of funding on a year-on-year comparison, when you are seeing 2021 as being the outlier here. It's not that we've seen a major dip, it's simply we're seeing not the same strong growth as we've seen over the last year. This is probably the major reason why there's currently so much talk about there's been a major deceleration of innovation or funding going into digital health as well. This is what I was mentioning earlier. There's been a healthy growth still across Asia Pacific. However, we do see that there has been a huge deceleration in terms of funding getting deployed. Going back to here, we're seeing that it fell from $4.4 billion to $2.4 billion. However, when you see some of the other markets, especially here Europe, for instance, we've seen that the growth, that the deceleration hasn't been as strong. And for instance, the Middle East has been exceeding the past year already as well. If you compare this to 2 years ago, there's been a growth of about 50% for most of the regions so far. So when you look into this in a bit more detail here in Asia Pacific, the most significant decrease was probably in China, whereby funding fell in 2022 to just about $1 billion, which somewhat matches to what has been deployed also in South Asia. South Asia is majorly driven 90+% out of India only, then with Pakistan, Sri Lanka, and Bangladesh only aggregating to a very small fraction of the total funding that has been invested. Where we've seen a very positive trend happening is in Southeast Asia. Funding this half year is already almost reaching the total that has been invested over 2021 total, with about $500 million invested. Very strong growth here. Where we've seen not so much of a deceleration, still very strong, is Northeast Asia, primarily driven here by investments floating into Japan and into South Korea. When we look into the winners and losers, when we go from a therapeutic and a cluster point of view, we've seen that there has been a very strong growth on the cardiovascular side. I'm going to get back to that a bit later on, with a year-on-year growth of 64% after we saw a major deceleration between 2020 and 2021. What we've also seen a very strong growth was in the gastroenterology sector, and here accompanied by the oncology side of it, whereby oncology saw a slight decrease or a slight dip as compared to the previous year. The previous term, we've seen a major increase of 6.7x between H1 2021 and H1 2022. What has also been very strong in growth is the gynecology side here. There's been lots of innovation recently getting pushed forward in the entire femtech sector. Also, startups incorporated and founded by women, very often also active within the women's health side, have seen a major increase in funding this year so far. So what we've seen happening within the news and how much announcements are being announced into there is also getting reflected on the funding side here as well. A sector that has been seen a bit of a dip was the oral health side. So anything that is dentistry, oral health related. However, we've seen a major increase like the past period between 2022 and 2021. In terms of the health tech clusters and health tech category side, we've seen that there was a major increase in the patient solutions and medical diagnostic side. We've seen a major dip in investments in the online marketplaces, the telemedicine and the research side. Telemedicine and online marketplaces have seen a very strong increase the past year, so between 2020 and 2021, majorly driven by there wasn't really much else to invest in during that time frame, and everybody was moving very fast into the telemedicine side. What we now start seeing is that there's a reconciliation on where innovation is going into. Most of the, let's call it the teleconsultation sides of services in the telemedicine space are not sustainable on a standalone basis. You need to integrate them into a more vertical solution, whereby you have a multi-layer solution within your platform available, and therefore standalone teleconsultation services are no longer as attractive as they've been over the past year as well. When we look then into where are the partnerships happening this year, it's very much in line with where you also see funding floating into within the medical diagnostic sector and the patient solution side. We've seen that there are about 34% of all partnerships getting announced within Asia Pacific. Health management solution, which incorporates everything that has to do with hospital systems or with EHR, EMR solutions, PHR solutions, etc. Are also always very strong on the partnership side, considering that hospital chains or hospitals or hospitals alone are always looking into implementing new solutions, and their digital health solutions are playing a very strong role, and therefore we are seeing lots of partnerships happening within the sector. When you are now comparing where the partnerships in Asia Pacific are on a global scale, you're seeing that in North America, as of June 2022, we've seen 470 partnerships happening, which is a massive amount of partnerships. We've already seen that there have been 98 partnerships happening within the first 6 months within Asia Pacific. So about one partnership every 2 days versus North America, where we've seen about 3 partnerships per day getting announced. And we're tracking all of these partnerships within the platform. So again, if you are already a user of Health Tech Alpha, by mid this week, you should see also a partnership table appearing where you can always look back into which partnerships have been announced also when. Some of the more noteworthy partnerships happening is, for instance, Otsuka Pharmaceuticals has been announcing a partnership with Jolly Good. Jolly Good is on the healthcare provider education side to basically see how they can move their solutions forward and actually engage better with the healthcare providers. So physicians here, for instance. Dr. Anywhere, Singapore venture, very, very well known because of raising a very significant funding amount last year. has been partnering with a platform called Vonage. They are providing basically the teleconsultation side only, and they're looking into partnering here to actually scale their teleconsultation services even better. See a question happening here at the same time. When you consider the size of venture investments, do you take healthcare IT, such as hospital IT, as part of digital health? I suppose healthcare IT cannot fit into the therapeutic areas. It's always a very good question. So let me go back to where I was also before. The healthcare management side includes healthcare IT for also hospitals here. We are classifying them as disease agnostic solutions or not accessed here. So whenever you look into the funding side of it, we look into the therapeutic focus specific solutions. It's a totally different bucket as compared to the disease agnostic side. So anything that is just health IT always sits under the diagnostic side, considering that there's no specific therapeutic focus area announced to it. What you also have very often is that you have platforms that are sitting in multiple therapeutic focus areas. Within the platform, they're assigned to all of these therapeutic focus areas. Here we are focusing on only the primary therapeutic focus area where the majority of their solutions are located in. Okay, we've been following also what's happening more on the clinical strength side of the business. There has been a publication in June of this year. There have been lots of fanfare also on the social media sites around how to measure clinical strength of a certain product, considering that we are having a very huge collection of clinical trials, regulatory approvals, patents, journal publications, etc., available as well. We have included this time a clinical robustness score for all of the ventures within the region. So you find in all of our research reports the same slide, but for the region alone. So when you look into digital health in Asia Pacific on the clinical strength side of it, you're seeing that there are 10% of all ventures in Asia Pacific that have a strength score that is higher than 1, which is quite significant here, with 104 ventures hitting actually the score of 1 alone. And then you have a score that is all the way going up to over 20. If you would like to understand more about how the score is getting calculated, do refer to the publication by Day et al. That has been published last month, the Journal of Medical Internet Research. It's a very good read, so I invite you to also read the paper yourself and look into it. From a therapeutic point of view, where we're seeing that the most partnerships, where the most clinical robustness ventures are located in, it's actually in the gastroenterology side, considering that most of these solutions are on the diagnostics or research side, both in order to get deployed into the pipeline, either for hospitals or even for pharmaceutical companies, require often evidence that they are not just falsely showing any sort of results, and therefore it's the more late stage ventures who already have a working product in market do require it. So 55% is fairly high. Same is also for the oncology side. Again, most of these solutions are either in the medical imaging side or within the research side. However, we also have the care side of it, whereby then the medical diagnostic solutions and the research solutions require clinical evidence, whereby the care coordination platforms do not require evidence. Therefore, it's not surprising that the share of ventures in the oncology space is actually lower as compared to the gastroenterology side, for instance. Lastly, cardiovascular, 28% of the ventures have clinical strength, which is also not surprising, considering most of these solutions here are also either medical imaging, so on the diagnostic side, or it's remote monitoring devices, whereby in case you would like to deploy them anywhere in a market, you would also need a certain clinical evidence. Otherwise, you won't get your device regulated in order to deploy it actually into the patient to start tracking any sort of solution. What you do have here are the wellness side of the cardiovascular side. So looking into your Fitbit solution, or your Garmin solution, which is also looking into the cardiovascular side more from a wellness point of view, these sort of solutions do not require any clinical evidence, considering that they are only for a wellness purpose and not in order to make any recommendation from a disease focus point of view. Good. A bit deeper on, but I won't deep dive into this a bit more, is on the regulatory side. We start seeing over the past 2.5 years now that the regulatory side is increasing in terms of relevance globally. So we started seeing that there have been 30 new regulatory filings as of H1 2022. The majority of those have been in the medical diagnostic side. However, we start seeing an increase of regulatory filings also in the wellness sector, considering that ventures would like to move out of the wellness sector into the diagnostic side. As the platforms are becoming more sophisticated, obviously, they start looking into how can I access more pathways to reach clients, patients overall in the end. And therefore, you do start seeing that wellness platforms are moving into it. You see Apple doing the same. You see Fitbit did the same a few years ago. So you start seeing the development in terms of where ventures are going into. I won't deep dive into this either too much. You can read it all within your spare time in the report yourself. We've seen a dip in terms of mega deals over the first and second quarter after having probably the strongest year last year. We've seen 24 M&As and 16 IPOs also last year. This year has been significantly weaker, driven by macroeconomic factors. We've seen a decrease, SPACs not working out in the US last year. So this year also in Asia, we've seen the first SPAC overall happening in Singapore, actually. However, overall, the public market hasn't been very active, and also the acquisition side has been significantly slower. However, now what we start seeing is that ventures start hitting a roadblock in terms of raising funding. So we might start seeing in the next half year more of a reconciliation of it, and ventures actually becoming an attractive acquisition target for also more funded ventures as well, considering that their solutions might still fit into someone else's pipeline as well. Okay, let me jump quickly through some of the clusters. As I was earlier mentioning, looking into the top 5 with patient solutions, diagnostics, online marketplaces, research solutions, and telemedicine. Some of them have been very increasing, and some of them have been very decreasing. Patient solutions actually jumped from outside the top 5 last year into the top spot this year, primarily driven by a Series D funding deal into Bioformus. Again, now you can start arguing, oh, is Bioformus now a US venture? Yes, they've moved their head office last year, I don't know, two years ago to the US. However, since they are born and raised in Singapore, we are still tracking them within also our own platform as being a Singapore-born venture, and hence they are hence they're counting to the Asia Pac development overall. When you look into where funding is otherwise getting deployed, you see this here. 22% are going into other clusters. So the lion's share of the top 5 are actually representing more than 75% of the entire funding that is getting that was deployed as of this year. Also interesting to see, if you've seen our previous webinars over the past years, you've always seen Chinese deals, Chinese deals, Chinese deals. What you've seen this year is now you have a Singaporean venture, you have a Japanese venture, you have 2 Chinese ventures here still, but you have also one Indian venture. So you start seeing a bit of more diversity in terms of the ventures that are getting represented here, considering that mega deals are scaling backward in China, and we see ventures accelerating also in many other countries as well, including Japan, South Korea, India, Singapore, Australia as well. Deep diving a bit more into the patient solution side of it. It represents 9% of the entire ecosystem in Asia Pacific. It's a very strong and growing ecosystem at a 7% CAGR year on year. This you should always see a bit with a bit of flavor of maybe we don't have everything yet, considering that within the first 9 to 12 months, ventures often operate very stealthily. However, we start including them backwards. So the number of 271 ventures as of the end of 2021 might increase over the next 6 months again, considering that more ventures are exiting the stealth modus. and are announcing themselves to be active within the market. Overall, 271, 9% of the entire ecosystem is a very healthy percentage share of the entire ecosystem of these ventures. Out of these patient solutions, 30% are located within China, 22% in South Asia, 17% in Southeast Asia, 21% in Northeast Asia, and 11% in Oceania. Here, do see that there's a difference in Southeast Asia, where most of these solutions are still around raising awareness or the access to healthcare, not so much on the adherence side of it. So anything that is disease management, digital therapeutic sort of solutions are not well accepted yet in markets when you look into Thailand, Vietnam, Malaysia, Philippines, Indonesia, Myanmar. Versus Singapore, whereby you do have a very strong pipeline of also adherence-focused ventures, considering that we are more looking into how do you treat a long-term treatment, and you're not just trying to bridge the access to healthcare for the patients of what you're doing, more of the developing markets. And therefore, it's not a surprise really that you see within, for instance, China or also Japan, South Korea, a very healthy pipeline of ventures within the adherence sector. So here, patient solutions overall. Most of the funding that has been deployed went into China last year, 56% lion's share, and then actually followed now by Southeast Asia. So even though we have a small ecosystem in Southeast Asia, we start seeing that there's more capital getting deployed in it, considering that there is the need of moving the ventures that are there further up the value chain, and therefore scaling them to provide more or better services to the patients. In terms of where the funding goes into, we've seen that most of it went this year again into late stage deals. Same we've seen last year. However, last year we've also seen that many investment went into Series B ventures. This year we've seen that there was a lot of investment floating into early stage ventures. What I was saying earlier, early stage ventures considerably raised more funding as compared to the past year. Seeing that there's the next generation of ventures entering the pipeline and actually becoming attractive to the investors overall as well. Just some examples here. You can figure them out in your own free time. Just 3 examples: Bioformis, cardiovascular centric, digital therapeutic solution, very active also within the clinical trial side now as well to help both hospitals and pharma companies to track the patient in an outpatient environment. Goki used to be a wellness venture, moved into the disease management, digital therapeutic side of it a bit more, providing a wearable remote monitoring device that can be used also to track your cardiac diseases. And then Emococ, also digital health, digital therapeutic solution, more on the emotional side of it, so in the mental health sector, that has been raising also here 12 million. This year as well, looking into here more the cognitive decline of the patient and how do you actually develop a counterbalance against their decline of their mental health overall. Won't deep dive into this one either too much, but what we are seeing is that oncology and cardiovascular are still the 2 strongest, as it was before. Gastroenterology jumped from place 14 into the place 3 here, considering that anything outside the top 5 considerably always raises less funding. So the step into the top 5 is not too difficult. Making your way to the top position is always the harder point. However, what we see overall, and this goes again a bit with the question that was in the beginning with these agnostic ventures, we start seeing that there was a deceleration of funding and therapeutic focused ventures overall. None of them has been exceeding the 500 million as of this year yet, which is a surprise, to be honest. The majority of solutions that we've seen getting funded this year were more on the provider side, so more the disease agnostic ventures within Asia Pacific, and not so much the disease specific ventures. So this has been very different to how it was over the past years, whereby oncology ventures have received immense amounts of funding, primarily driven by the Chinese ecosystem. That's also the scale back of funding overall. Some of the noteworthy sites, we've seen some noteworthy deals here, Bioformers raising from General Atlantic, earlier on mentioned 300 million based back in April. There's been investment from Quadria Capital, PE fund, headquartered in Singapore, very active within the Indian ecosystem. Put 125 million into Medibuddy. Medibuddy, in case you've seen the news, acquired a venture last week or 2 weeks ago, called Medix. I think Medix, which is more on the hospital side as well. Clinics, not Medix, clinics. Acquired an Indian teleconsultation provider that is more on the provider side as well. Smarty, raised from Taikang. It's a consumer marketplace solution within the dentistry side here as well. Medica Bazaar raised funding from Lighthouse. They're providing an e-pharmacy solution, 65 million. And then AI Medical Service raised funding from the SoftBank Vision Fund 2 earlier this year, or earlier two months ago, as far as a Series C funding deal. So we do start that there are still many also later stage funding rounds that are significant. However, what we are not seeing this year is a huge amount of deals that are larger than $100 million. We've in fact only seen 2 of them, and the majority of deals were anywhere between 50 and 70 million when it comes to the more later stage funding rounds. Some noteworthy exits. Again, the pipe in terms of M&A exits has been still very weak as compared to the past years as well. There has been an acquisition of Librate by Pristine, Jellyview by Yana, Medsys, PathLabs by MoneyPower HealthMap, Tiny Step by Baby Chakra, and Care24 by Human Life Management. What's interesting here to see is that most of these acquisitions are happening within the Indian ecosystem. If you followed my webinar 6 months ago, what I was saying is that the Indian ecosystem is a very large ecosystem that has been increasing. However, we do see the discrepancy between ventures getting funded and ventures not getting funded. What we now see is that some of these earlier players, not Librate, but some of the other earlier players, need to scale back and hence getting acquired by larger providers as well, or by other digital health startups in like here Baby Chakra and Tiny Steps, for instance, that is looking into a more horizontal, a more vertical integration of new solutions to their patients as well. And then what I was mentioning earlier, the only spec that we've seen was a company called Oida Life that was acquired by 8i Acquisition 2 Corporation. That happened in April of this year with a deal value of $90 million. 2 exits that we've only noticed this year. One is in China, one is in Australia. Now there was one with Lunet also happening in Japan as well. Korea, in Korea as well. Both entered the market, however, both decreased in terms of their share from their opening price, similar to how the entire public market has been performing over the past few months as well. So as a conclusion of what we start seeing, that I kind of elaborated earlier slightly, is that we start seeing that we know that 2021 has been exceptional globally in terms of funding. However, what we start seeing is that some ventures start struggling now with raising their funding overall. Funding strength overall is at 36%, whereby 47% of the late stage ventures have been raising funding overall. When you start looking into the more 12 months here, there haven't been many ventures that have been raising funding overall. So with only 36% of the ventures that raised funding within the past 18 months, there's a high chance that we start seeing either more and more dropouts from the market because ventures have to shut down, or what we start seeing is that there are more acquisitions happening overall. What we could also look into is maybe some of these ventures should start looking into rescaling or refocusing their business model and trying to engage with our client groups as well, to become more profitable. Because at the moment, what we really start seeing, not just in Asia Pacific, but globally, is that many ventures are firing their headcount. In case you follow me on LinkedIn very heavily, been putting many of these posts out there, is that they've been having all a hyper growth, considering cash was free, basically. And now they're all having monetary crunches and hence start seeing the scale back of it to become profitable. So either we start seeing that there are more acquisitions happening in the next 6 to 12 months, or we start seeing more and more shutdowns or ventures actually more pivoting into new solutions as well. Good. I think this is my last slide for today as well. So in case you enjoyed this, I hope you would also download the Asia Pac report overall. There've been significantly more information in there than I was able to share within those 43 minutes with you today. Overall, you can always reach me on galengrowth.com or by the email address that I've shared earlier as well. There's one question here overall. Let me focus on this one for now as well. Do we see active trend in China in particular? I believe that the active trend is how are we seeing the overall Chinese ecosystem developing. What we start seeing is, because all of the tech crunch overall, previously we had the Sino-US trade war also happening. Let's put it under trade war. There have been already a deceleration of the investment last year. This year, what we now start seeing is that the Chinese government is crunching back on the entire tech side. Everything that has been scaling very beautifully under Hu Jintao is slowly but steady getting crunched down by Xi Jinping, considering that he wants to have a more tighter policy on the overall market. Digital health is not different. Ventures that have been seeing significant growth over the past years are now becoming a bit under the scrutiny of the China security laws that are getting released. Hence, investors are becoming significantly more skeptical about whom to invest in, considering that they do not know whether the company might be under scrutiny later on. There needs to be the mindset change of the investors and the startups overall, how to better work together with one another. And this is when we will start seeing that there will be a significant funding increase later on as well. At the moment, it's a very difficult market. You still have shutdowns overall across China. Market isn't really open at the moment. There's no export of many digital solutions as well at the moment. Together with the entire tech crunch that we start seeing, it's not a healthy environment to deploy capital with in China at the moment. However, if China starts opening up, more foreign talents are entering China again, Chinese are exporting their services again, we will start seeing also an uptake of funding again, probably back to where it was previously as well. Perfect, good. Give 1 or 2 more minutes in case there are any more questions coming in. Otherwise, thank you very much everyone for joining today. Do feel free to download all of the reports on the Health Tech Alpha site as well. Do drop me a message as well in case you would like to understand more things about the digital health space or how we can work together with one another. So otherwise, I'm very happy to reconnecting with all of you in 2 days for the North America webinar. Many thanks for joining today.